In this segment, Trader Nation, brought to you by Direxion ETFs, we explore how investors and traders can position their portfolios for the future with Direxion's expanded suite of ETFs. The U.S. economy getting ready to take off. The IMF predicting that America set to lead the world in a post-COVID boom, estimating that the U.S. economy will grow 6.4% in 2021, the fastest rate in decades. Consumer confidence also hitting a one-year high last month amid accelerated vaccine distribution, strong fiscal stimulus support, and the reopening of non-essential businesses. Joining us now is Dave Mazza, Managing Director and Head of Product at Direxion. Dave, great to have you on. Investors adding a record $95 billion to U.S.-listed ETFs in March. Can you put into perspective how big this recent ETF jump has been?
Well, it's pretty huge because that's 1 billion more than the previous monthly record, which occurred just in February. So if we look at the total Q1 flows and project that out for the entire year, that would be a gangbuster year for ETF flows. One of the best on records, and actually would be by far the best on record if this pace continues. And the reason for that is investors are thinking about ETFs more and more as a core part of their portfolios because they offer such wide-ranging tools, whether it's thinking about broad-based asset allocation with ETFs focused on benchmarks like the S&P 500, Russell 2000, MSCI EFA for that full portfolio, or more thematic type ETFs to help round out or be accessing specialized areas, or some of the trading tools that a firm like Direxion offers for investors looking for more short-term opportunities. All of that's available within the ETF structure.
Why are more investors adding ETFs to their portfolios?
I think really one of the core reasons is based off of the ETF structure itself. So ETFs are generally, compared to mutual funds, they're going to be more tax efficient. They're going to be more cost efficient. So there's some benefits right there. The other thing is ETFs are flexible. So an investor can go long an ETF, they could short an ETF, all that's happening in their brokerage accounts. As we know, as brokerage commissions come down across the board, across major platforms or more digital platforms, now more investors can use ETFs. But lastly, and this is a really important point, as more, and particularly younger investors have gotten interested in the stock market, there's been a lot of focus on individual securities. And on one hand, that's really, really good. On the other hand, ETFs are diversified. So you're going to get a basket of, in some cases, dozens of stocks, or in other cases, hundreds of stocks, again, depending upon the exposure, all within the ETF. So let's say you really like a particular area, such as cloud computing or hydrogen, what have you. You can get that in an ETF and not have to take on the single stock risk of just picking that one particular cloud stock or hydrogen stock that an investor may like.
What trends do you see when it comes to investor preference in ETFs?
I think one of the most interesting things we're seeing is, ETFs provide broad-based exposure to stocks, to bonds, to commodities. It's really all been about stocks. We actually have seen inflows into fixed income ETFs, but much more modestly. And most of the money has gone into U.S. equity ETFs at the expense of international ETFs. And at the same time, we've seen money move out of gold and other commodity ETFs. I find that to be an interesting trend because, as we know, there's been a lot of chatter about what rising interest rates or the improving economy can do on inflation. Historically, gold has been considered an asset that can help with inflation, but investors have really stuck with stocks and have added using ETFs in a material way to that. The other area that we are seeing is what I mentioned before, these thematic ETFs. What they do is they offer narrower exposure to more unique and emerging nascent industries, and that's an area that we've really seen investors put money to work.
What are some ETFs that have been really strong performers, and what are ones have investors geared away from?
I think from a performance perspective, we've really seen significant interest and performance kind of coincided that over the last year, with ETFs really focused on innovation or on disruption. So for example, we have an ETF, the ticker is MOON, M-O-O-N. It's the Direxion Moonshot Innovators ETFs. This is just 50 small and mid-cap companies that spend the most money relative to their peers on R&D, relative to their sales, and have innovative corporate culture. This particular fund has had exceptional performance during this year, certainly with some volatility in the last few weeks. But again, it's really an area that investors have flocked to as they're interested in rounding out their portfolios and avoiding just some of the large mega cap growth stocks that have dominated index performance over the last few years.
And what are short-term traders favoring when it comes to leveraged and inverse ETFs?
Yeah, so Direction offers a large suite of leveraged and inverse ETFs. These are really for short-term traders looking for returns over one day or a couple of days. That's been really interesting. So we know that there has been this broader rotation toward reopening stocks, and many of those are value stocks, meaning they've fallen in price so much that they're inexpensive relative to their future earnings. Traders have not really been as interested in that. They've stuck with areas like biotech, like semiconductors, really looking to kind of continue to take advantage of those short-term opportunities. What I find interesting is even during the pullback we saw in the semiconductor, in the growth, in the tech space over the last few weeks, that's steadied a bit over the last few days. Traders continue to add money, continue to trade the long side of the products, meaning amplified exposure when it does well versus the bear side, which is amplified exposure if the index were to go down. They've stuck on the long side. So I think that's an interesting tidbit of investor sentiment. So for the time being, even though we are seeing this broader rotation, rates are rising, traders are sticking with growth, sticking with semiconductors, biotech, areas of that nature.
All right, Dave Mazza, Managing Director and Head of Product at Direction. So great to have you on. Appreciate it. And to find out more about how Direction ETFs enable you to seek profit and manage risk in all market conditions, you can visit Direction.com. Before investing, carefully consider a fund's investment objective, risks, charges, and expenses contained in the prospectus at Direction.com. Read carefully.